So as Christina pointed out, that $900 million in losses piled up in the prior year. You don't often see that when an IPO comes to the market here. No profit, no problem. Let's raise this with Barron senior writer Jon Swartz. Jon, are we to worry about stuff like that? I heard one analyst refer to Lyft as Amazon with wheels. That the criticism of Amazon was that it was piling up loss after loss, even after it went public.
It took a while, right? It took a while for it to be profitable.
That's an enviable company to emulate. But what do you think?
Yeah, you know, that's key. I mean, as Christina just mentioned, a $911 million loss. I know their revenue is up to $2.2 billion, but the last 3 years they've lost a cumulative, more than $2.5 billion, and that's something that investors will look at in the long term. So, despite the pop that we have today and perhaps into next week, there's that school of thought. I mean, when are they going to become profitable? How much capital will it take for them as a public company to kind of reverse that? There's also the regulatory issues. Once Uber goes public, does Lyft have a hard time as the number 2 company in that market? Also, bills or laws that would make their employees at Lyft and Uber full-time employees rather than contract workers has an impact on the economics, plus all the stock that's owned by the 2 founders. In the event that something goes wrong, it'll be hard to dislodge them. These are all things that in the longer term will start to resonate with investors. But for now, we're seeing like this tsunami or confluence of events that leads Lyft to this big day with anticipation for more to come with Uber and Pinterest.
Do you think there is a spillover effect from a successful offering like this? I only say a launch. I don't say the offering itself down the road is necessarily marked for success, but this is what we watch on a debut day. What do you think?
Yeah, it's interesting. I know there was a fair amount of skepticism when Uber bankers associated with that IPO were talking about a market value of $100 to $120 billion. That actually might be conservative after what happened today. I mean, there is a pent-up demand, and we have the big names, the consumer brands that are going public in the internet space, especially the unicorns. So the big ones are all going to be timed around now. So there is going to be this wave of euphoria and enthusiasm. I'm just thinking in the longer term, people are going to start looking at the profitability, and they're going to be looking at the revenue and all these other issues, and they're going to be wondering, how long do I hold on to this? I
just wonder, given the delay in the launch of a lot of these IPOs because of the government shutdown in January, that might have ended up being a good thing. It sort of got people's tongues wagging for this moment, right?
Yeah, it built up the enthusiasm. The only thing that was kind of interesting would be we hear these, mumblings or rumors or rumblings of a possible recession by the end of the year. So what impact will that have on the flip side? So it kind of goes both ways.
It does. Jon, thank you very, very much. Jon Swartz, Barron, senior writer here.